America are having their biggest slowdown since the 2008 Great Financial Crisis, and now landlords are starting to enter panic mode. This landlord panic mode means that we're going to see even more homes hit the market for sale in 2026 and even more downward pressure on home prices. And in this video, I'm going to give you all the data. This is pretty crazy, everyone. A lot of people thought the rental market was going to be a strong point of real estate in 2025. Well, not so much. CoStar just reported that U.S. apartment rents fell in their steepest September decline in more than 15 years last month, with the year-over-year slowdown signaling a more pronounced softening in the market for apartment rents, according to apartments.com. At the same time, the Wall Street Journal just came out with an article yesterday titled "Renters Have the Upper Hand and They're Probably Keeping It." Meanwhile, single-family landlords are now dealing with their worst rent growth in 14 years since 2011. So we have a double-barreled slowdown across the rental market in America. And what I mean by that is both the apartment market and the single-family rental market are falling at the same time. Apartment rents are now going negative in many markets. Single-family rents are about to go negative in many markets. And this is occurring at a time when the for-sale housing market is also in a recession. Home prices are now dropping in half the US, and they're decelerating on a national level year over year. So what this all points to, everyone, is very clear. Housing market deflation is what we are starting to experience and what we'll probably continue to experience more of in 2026. And this housing market deflation is great news whether you're a buyer or a renter, because I'm going to show you some of these rents, everyone. They are literally in free fall in certain markets. I was looking here in Austin, Texas, where I used to live. To the southeast of Austin, I found an apartment community. Actually, my friend sent it to me. This apartment community has 1-bed, 1-bath units available for $699 a month. $699 a month for 1-bed, 1-bath units in Austin, Texas, everyone. These are pre-pandemic rents. It doesn't get cheaper than that. Meanwhile, if you go down in San Antonio, you can rent a 3-bed, 2.5-bath house for $1,300 a month. And oh, by the way, if you go to Atlanta, Georgia and move into a new apartment building, they're going to give you 4 months free rent to move into that brand new apartment building in Atlanta. And oh yeah, by the way, you want to go to Nashville and rent a townhome, they're going to give you 12 weeks free rent plus $1,000 off your first month rent. I mean, these rental deals, everyone, are getting crazy in certain markets. The rental deflation is going through the floor. And in a market like Austin, we're already back to pre-pandemic rents. So I want to frame this for you guys. So the rents are dropping in many markets. Great if you're a renter, right? It means keep renting. You're going to get a better deal. It means negotiate with your landlord for sure. If your lease is coming up and you live in the Sun Belt and Mountain West especially, negotiate with your landlord because the rents are going down most likely in your market. But what it also means, everyone, for home buying, declining rents means that there's going to be less of an impetus for home buyers to get into the market. Right? I mean, why would a home buyer who thinks that today's prices are too expensive and who feels priced out, why would they jump to buy a house if their rent is dropping? The answer is they wouldn't. And what we're seeing actually right now is something that is somewhat of a historical cycle. We saw this cycle happen back in 2008, where the cost of buying went way up more than the cost of renting. And then after the crash in 2008, the cost of buying went below the cost of renting. We're seeing a similar thing play out today, and I'm going to show you a chart now going back 50 to 60 years that really reveals a lot about what we're seeing in the housing market right now and what you can expect in the future. And actually, this first chart I'm going to show you is just the chart of home value growth in the last 70 years in the US. This is home prices going up and down. And one thing I want to make clear, the for sale market has already heavily decelerated. We only have 0.1% value growth year over year. Basically, no value growth year over year on the housing market through September 2025, according to data from Zillow. You can see this is actually already one of the worst performances for the for sale market in home prices on record. The only other times we've seen a performance this bad for the for sale market are the 2022 mortgage rate shock briefly, the 2008-2009 GFC, the 1991 Gulf War recession, in 1982 when mortgage rates went to 18%, and 1973 when we had a recession. So we're already in uncharted territory with how poorly the for sale market is trending. But the big issue here for the for sale market, everyone, is the lack of affordability, and why we're going to continue to see the for sale market struggle. Take a look at this blue line. The cost to buy a house is now 39% of median income in 2025. The cost to buy a house. You can see that's even more than it was, or similar to what it was in 2006 at the peak of the last bubble. So you see, like, the cost to buy is normally 25% of income. It rocketed up in 2006. Then it crashed. Then it rocketed back up 2022, 2023, 2024. Now it's starting to come down. But compare it to the orange line, the cost to rent. Note how the cost to rent as a percentage of income is much more stable than the cost to buy as a percentage of income. And note how we've seen two previous periods in the last 50 to 60 years where the cost to buy went way up more than the cost to rent, only to eventually come back below the cost to rent. I believe we're in the beginning stages of this period now, and then we're going to continue to see the cost to buy converge to the cost to rent. That basically is kind of what happens in the housing market in the long run, because you can think of buying and renting as two sides of the same coin, right? A first-time buyer is renting, then they make the move to buy. Additionally, someone could sell out of their house and rent for a little while the market corrects. Additionally, an investor is always looking at rents when they're figuring out how much they could buy a house, right? An investor is always looking at rents. So these are two sides of the same coin, and we have the for sale market overvalued right now relative to the rental market. And that's why the home buyer demand is so low. That's why inventory is skyrocketing. That's where prices are dropping in half the US. It's because the for sale market is overvalued relative to the rental market. Now, the for sale market is going to come down to the rental market. The issue is, however, that the rental market is now also going down at the same time. This is not what many people expected. Many real estate professionals, especially investors, all these people on, who do the BRR method, the BRRRR method. You guys can let me know if you know what that is, if you're thinking of doing the BRRR method. They're all were banking on the rental market going up. Solid rent growth, in-migration to the boom towns. They all thought that that would continue. But now that rents are in free fall in certain markets and are decelerating on a national basis and are going negative, that is a huge stick in the tires for a lot of real estate investors. And it's why these investors are really panicking behind the scenes. These investors are exiting the housing market very quietly, actually, especially the big Wall Street investors. They look at this math, they look at this data, everyone, and they're like, I don't want anything to do with a declining rent market. A declining rent market really is problematic for these investors, and it's one of the reasons why they have stopped buying homes. So, townhome development in Nashville, 12 weeks free rent, 4 months free rent, insane. So it's a $2,800 a month townhome, 3-bed, 3-bath. 4 weeks free rent means that's what, like $1,900 a month? Now, what are these investors doing as a result? Well, they're no longer buying. Investor purchases have plummeted in the US, right? These investor purchases have plummeted down to the lowest level in a decade in nominal terms. Raw investor purchases have plummeted. And if we go to a market like Nashville, wow, they've even plummeted more than the US average in terms of investor purchases. If we go to a market like Atlanta, oh my gosh, the investor purchases have plummeted 70%. Why are these investors no longer buying? Well, the rents are dropping, and then the property taxes and insurance is going up, right? So why would I buy an investment property when that's the case? If we look in a market like Phoenix, we can see a similar situation. Investor purchases have plummeted and continue to be extremely low. And you just have to ask the question, right? How long will this situation persist for in the housing market before prices really start to break as well? Home values in the US are now going down in about 15 different states on a year-over-year basis. And that's important to understand, because there's a lot of people out there trying to tell you that home prices aren't dropping. There's a lot of, I call them real estate bros. Real estate bros. They're like, no, there's no crash. There's never going to be a crash. Folks, it's already dropping in 15 different states on a year over year basis. We haven't even seen the unemployment rate go up above 4.5%. Right? So this is something that's already playing out, folks. This is not a prediction. This is not speculation. This is already playing out. Home value declines in about 1/3 to 2/5 of the US on a year over year basis. And so that's great news if you're a buyer, right? If you're a buyer and you're looking to buy a house right now, especially in the winter when sellers get more desperate, this is all terrific news. Stagnating and declining rents, increased inventory, prices dropping in states like Texas, Florida, Georgia, Arizona, Colorado. You have a lot of negotiating leverage on your side as a buyer, particularly if you currently rent. And I actually went through everyone, and I went through 10 different metro areas, and I saw how many units these metros had under $1,000 a month in rent and under $1,500 a month in rent. Because I said to myself, well, what's real affordability, right? Because in many markets, rents are still expensive. But in these markets here, Austin and San Antonio, it is crazy how affordable the rents have become. In Austin, there's almost 15,000 units right now priced at under $1,500 a month. In San Antonio, there's over 12,000 units priced under $1,500 a month. In Phoenix, there's in Phoenix, folks, there's 8,000 units priced under $1,500 a month. Phoenix is supposed to be like this expensive California version 2.0 housing market, right? Everyone in Phoenix is like, oh my gosh, everyone from California is coming here and bidding up the price. There's 8,000 units in Phoenix under $1,500 a month. There's 1,700 under $1,000 a month. In Denver, folks, there's 7,600 apartments and houses on the market for under $1,500 a month. Interestingly, like these kind of boomtown areas have cheaper rents than Columbus and Indianapolis, which is really interesting. Salt Lake City had the fewest rentals below $1,500 a month. But the overall point is here, folks, like in some pockets of the US, renting is getting, I'm going to say it, fairly affordable, especially relative to income. There's just so much supply on the market. The builders built so much. And now the immigration is slowing so much that the demand just isn't there for these rentals. And you're seeing a lot more affordable rentals, which again is great news if you're a home buyer as well. Yes, not only could you rent for another year and have a more affordable rent or find a cheaper rent, it's also going to flow through to home prices. Because as rents stagnate or drop, that means that the calculation that investors make to buy homes also drops, right? If rents go down 5%, that means investors write down what they can buy at by 5%. If rents go down 5%, that means home buyers now have a monthly payment to buy that they're only going to accept at 5% less. So overall, I'm just seeing real deflation coming in the housing market, which is a bit contradictory, right? We keep hearing in the news about inflation, right? The debasement of the dollar. We keep hearing about tariffs. We even now see Trump is doing sanctions on Russia, caused oil prices to go up last week. A lot of people are fearful of inflation. And rightly so, right? The US government deficit to GDP ratio is 6.5%. There are reasons to be fearful of inflation. However, what we're seeing in the rental market does not look like inflation at all. It looks like disinflation, or it even looks like deflation. And I think that's so interesting because normally the rental market and the housing market, that's about almost 1/3 to 2/5 of the CPI calculation. And if we're going to see deflation in the rental market, in the housing market over the next year, well, does that mean we're going to see disinflation in CPI? Are we going to see inflation rates lower? Not a lot of people are banking on that, but when you're looking at the rental market right now, it kind of suggests we might be seeing that. And then maybe the Fed was actually a bit too late in cutting interest rates, and maybe we're going to see lower inflation in 2026. It's not a popular thing to say, but when I'm showing you $700 a month rents in Austin, Texas, that suggests that something is going on. Now, folks, I am live right now, and I will be taking your requests throughout this video. What do you guys think about the rental market? What do you think about landlords? We already have some interesting requests. One user is saying, I wish the Florida market would finally collapse so we can see more affordability. I know it's already down high single digits, but over the last 4 years, it's up 40%, so a ways to go. That's a good point, everyone. The housing market's a slow moving beast. Florida is already correcting, but it still feels expensive. And that might be the case in a lot of other markets too, right? Just because rents drop 5% or just because home prices drop 7% doesn't mean it's affordable automatically. However, it does mean that it's moving in the right direction. Another user says, Mom and Pop don't own most of the apartments, though, especially all these luxury apartments that popped up. They really overbuilt them, too. This is a point about who owns these apartments, right? Most of the large apartments in America are owned by big institutional investors. They are cutting rents. Nick says that they're greedy landlords. Smart ones always want it occupied. So that's another good point. Landlords are starting to prioritize what's called heads in beds. Heads in beds. Now, what heads in beds is we're going to favor just trying to maintain stable occupancy and we'll cut our rent. So we'll engage in deflationary practices just so we can get heads in beds. We can see here the single family rent growth index from John Burns Consulting down to 1.5%. That's the sixth lowest level in the last 40 years. The only other time single family rents have decelerated this much was the mid 2000s into the GFC. So this is the other crazy thing, everyone. I know for some of you out there, it might seem a bit esoteric. You might be saying, wait, what is like rents decelerating to 1%? Why should I care? Understand that this is actually really rare. Rarely do we see the rental market take this type of nosedive on the single family side, especially. Meanwhile, you have RealPage, who's the biggest apartment data aggregator in the US. They have the leasing management software that a lot of these management companies and apartment owners use. They're reporting a surprise decline in third quarter rents for the US apartment market. Normally third quarter rents go up, they went down. Annual rents, according to RealPage on the apartment market, are dropping. And then look at this comment here by their chief economist. He's saying, sluggish new lease activity appears to be the primary driver behind a weaker than expected third quarter. They say that this sluggishness looks to be a reflection of broader macroeconomic headwinds as the nation has seen job growth quickly slow in the past few months. There was a lot of quotes also in this Wall Street Journal article that came out yesterday on October 26 about renters have the upper hand and they are probably keeping it. Apartment rents nationally are advancing at their slowest pace in years because of the glut of new units is taking longer to absorb. And what struck me reading this was some of the quotes from the people in the industry. They sounded pretty dire, some of these quotes from some of the people in the industry. Multifamily owners and analysts anticipated that 2025 would be the year that surplus supply balanced out and they regained pricing power. Instead, landlords are now betting on the ability to raise rents by the end of 2026 or sometime in 2027. Whoa, interesting, folks. So this isn't just a short-term thing. These landlords are now saying we might not be able to increase rent until 2026, at the end of 2026. Even that might be wishful thinking. Analysts at data company Yardi Matrix recently lowered their projections for 2027 rent growth. They expect more tepid growth that year because of more new apartments coming online than originally expected. Folks, this is a big deal. The worst rental market we've seen in 14 to 15 years across both single family and multifamily. And the industry experts are now saying maybe 2027 it will recover. And that's just suggesting that the housing market's having a demand issue right now. There's just an overall demand issue in the housing market. So we're seeing the rents drop. We're seeing the rental demand drop. But let's not forget, the demand to buy homes is at the lowest level in 30 years. So the number of existing home sales on the US housing market is around 4 million. That's down 25% from pre-pandemic. That's down about 35% from the pandemic peak. And it's basically similar to the 2008, 2009, 2010 level of demand that we had on the home sale market. And so you say to yourself, isn't this contradictory? if the demand to buy homes is this low, the existing home sales is this low, and is on par with 2008, 2009, is really the only other time we've seen demand this low. Well, shouldn't that mean there's more people renting, right? Shouldn't rental demand be higher with buyer demand so low and mortgage rates, at 6.5 and prices so high? Shouldn't people be electing to rent instead? But no, folks, we have RealPage saying sluggish new leasing activity. This is kind of an interesting story. And I think it's related to three things. One is affordability, right? The overall affordability got really bad during the pandemic. Two, I think it's like an overall maybe slowdown in economic growth, right? Economic growth is slowing, at least on job growth. But number three is immigration. And this immigration story right now, everyone, is massive. And I think it's shifting the housing market in a way that few people are fundamentally understanding. The fact that we went from having around, I believe it was around 3 million net immigration in 2024, and that might go to zero in 2025. It might go to zero. It could go negative based on deportations, but like maybe it goes to zero. Maybe it's a plus 200,000. Either way, it's a massive collapse in immigration. And that, I believe, is now showing up in the rental market and the housing market. There's just simply not as many people moving here and applying for work permits and looking for jobs. So that means not as many people looking to lease apartments, which means higher vacancy rates and lower rents. And if this is the case, like if my suspicion here is correct, this could be the first wave of multiple years of depressed demand in the rental market, which of course is going to mean depressed demand in the buyer market as well. So, this could be the start of a multi-year trend. And I just want to show you guys, and again, this is a multi-year trend that's good news for you as a buyer. Lower rental demand, lower rents, great news if you're a renter. Also means more investors are going to struggle, more investors are going to be forced to sell. But I just want to show you guys this graph. It's an immigration graph from the Brookings Institution. And it's a graph on the number of work permits from immigrants, immigrant work permits. And I believe this graph tells the story of what we're seeing in the rental market and also what we're seeing in the labor market. You can see a massive uptick in work permit applications from eligible immigrants, peaking in March of this year. So even in March of this year, there was still buoyant demand in the rental market. But then work permit applications among eligible immigrants have plummeted, folks, by about 55-60% just in the last 5 months. And I think this is the story for the rental market. This is the story for landlords right now, especially if you live in a city or state that relied a lot on immigration to support the housing market. I'm looking at you, Florida. I'm looking at you, Texas. I'm looking at you, Arizona, Southern California, parts of New York. This complete collapse in immigrant work permits is going to have big ramifications on the housing market going forward. And it's a little interesting because I just don't see anyone in real estate really talking about this out loud. You see apartments.com and CoStar and RealPage acknowledging the slowdown in the rental market. You see the Wall Street Journal writing an article on it. No one, though, is saying the quiet part out loud. And that's the fact that there's just not as many people as there were the last 2 years. And that this is a structural issue in demand for real estate, which is going to spill over into deflation. I mean, that's what it looks like, folks. Worst rental market since the 2008 to 2011 crash. Slowest home price growth basically since the same time. Inventory on both the for sale and rental market skyrocketing. The only thing that's kind of duct taping this housing market together from complete collapse is the fact that we haven't seen the unemployment rate really rise by that much, and the fact that the stock market still goes up. I mean, the stock market today went up like 1%, 1.5%. So stock market continues to go up. Unemployment still sub 4.5%. Those things are kind of holding the whole thing from completely breaking, right? As the fundamentals inside just continue to deteriorate. And, I can't tell you if and when the stock market's going to crash. I thought by now the stock market would have corrected. I thought by now we would have seen a bigger increase in unemployment. Maybe the fact that immigration is dropping a lot is keeping the unemployment rate low because there's less competition for jobs. That could be one thing. But we also know that new hiring also isn't very good. New hiring also isn't very good. So, in fact, the new hiring rate is also the lowest level since 2008. And so you just have all these stats, lowest level, worst since 2008. And I know a lot of people out there, they get maybe bored or annoyed by these comparisons because they're saying to themselves like, no, it's not the same. But really, folks, a lot of the metrics are lining up very similar to 2008 across the housing market, with the exception of the unemployment and the mortgage defaults. But I think a good question to ask is, what does this mean for you as a buyer? What does this mean for you as an investor? If you're looking to move, if you're looking to upsize or downsize, where are prices heading in your area? How are these rents going to impact it? And what is our forecast here at ReVenture? Well, let's dig into the data. Let's get back here into the requests here. I know this is a very active chat. Steven is saying, just understand that with the record low labor population, there's no chance unemployment rate goes up. This is the biggest false economic flag. I wouldn't say there's no chance that the unemployment rate goes up. Because, folks, one thing you got to understand. So yes, it's true. There's less competition for jobs than there was a year ago. But companies are hiring now at the lowest rate since 2008. So in August 2025, the hiring rate was 3.5% for the private sector. Literally, that's the lowest hiring rate we've seen since September 2008 through November 2010. So the hiring has fallen off the table. So yes, there's less competition for jobs on labor force supply due to the reduction in immigration, both skilled and unskilled. But also companies are hiring also at their lowest rate in over 15 years. So I would not bank on the idea that the unemployment rate can't go up, because the hiring has dropped off precipitously. And if the housing market especially experiences a real recession in the next 12 months, which I mean, it already is in recession, but if these prices and rents continue to drop, we could see the unemployment rate go up. All right, what else? How about let's keep building and drop the housing price to the floor, according to Bailey. He wants the builders to keep building and drop the price to the floor. Now, this is an interesting thing here that Trump was talking about the other day. Trump and Bill Pulte, let's see if I can actually find the quote. It's a very interesting article, folks. Trump said the American dream is on hold because home builders are sitting on 2 million empty lots. This was from a couple weeks ago. I reported on this to you guys. It was a very interesting story. With the idea being that President Donald Trump compared home builders to OPEC in a Sunday Evening Truth social post. He gave voice to a common populist trope that greedy developers are hoarding the supply of houses and just driving up costs. Well, we can debate about that. I think it is true that builders are keeping certain homes off the market. It's also true that builders have the most supply in 15 years. It'll be interesting to see if Trump strong-arming home builders actually works, right? Because if Trump is able to strong-arm the home builders into continuing to build through this housing demand recession, I mean, that would be great, actually, for home buyers and renters. It would basically squeeze builder profit margins for these publicly traded builders, and it would help lower values. Now I don't know if this will actually happen, right? Who knows if builders will build more because Trump said this, but it is interesting. This is something he is looking at. Shirley says that Nashville is a top city in the country. The New York City rich have relocated to Tennessee. Well, that's interesting. Nashville is a top city in the country. Now, that is true. I really like Nashville. I live in Nashville. The New York City rich have relocated to Tennessee. But folks, I think if you live in a city like Nashville, or if you live in Miami, you should pay attention to the local data in your market. Because while it's true that Nashville had a lot of people move there, why then are townhome developers in Nashville offering 12 weeks free on townhome rentals? 12 weeks free, plus $1,000 a month off your first month rent. I mean, let's take a look at these townhomes, folks. I mean, these look pretty nice. I'm going to be honest, $2,800 a month. I might got to get myself one of these units. I mean, look at this, folks. 2,800 a month. This is a 3-bed, 3-bath. So if you were to get roommates, each roommate would pay $950 a month base rent, but then you get 12 weeks free, which I assume is probably like 1/3 of the rent. So it would knock your rent down to $700 a month. So I think we got to get over this notion that these boom towns are still booming in the same way. It's just not true. These boom towns are starting to correct, and it's ultimately great news if you're a buyer investor. Let's see. Charles is saying that's because the jobs at Amazon and healthcare companies that moved to Nashville have been eliminated. Maybe, but it's also happening in Austin. It's also happening in Atlanta. It's happening in Phoenix. Like it's happening in a lot of these markets at the same time. Someone else says that those townhomes remind him of mouse cages. Do they look like mouse cages? Let's see. I don't know, maybe a little bit. I think they look nice though. I like these townhomes. I think on the interiors they're really nice. We'll see if they're able to lease up. What else are you guys thinking and feeling out there? Llama Bryant is saying building costs like lumber have gone up, reducing builder profit margins. Is that true? Have lumber prices gone up, reducing builder profit margins? Lumber prices actually have gone up in the last, looks like, month by about 10%. You can see lumber prices are above where they were in 2023 and 2024. So we have seen lumber prices go up a bit, $600 per 1,000 board feet. How bad is this historically? You can see it's nothing like what we saw during the pandemic. I don't think lumber prices being where they are today is the main reason builder profit margins are low. I think it's because they're having to cut prices and because they have a lot of inventory on their lots. All right, we have a request, everyone. Wellington, Florida, 33449. A big question is, we're talking about the national housing market here, rents, but what's actually going on in your area? What's going on in your area? Are prices already dropping? 33449. 33449. Oh boy, good news for the person who requested this zip code, which is, I believe, in Palm Beach County on the southwest side of Palm Beach County. Values are already down 7.4%, folks. We already have a 7.4% correction here, west side of Palm Beach County, in the last 12 months. Values are already dropping. That's the biggest one-year decline since 2009. Biggest decline already in 16 years here in Palm Beach County. Interestingly, though, our one-year forecast here is only minus 1%. So we think this market here on the west side of Palm Beach County is actually going to even out. We think it's still going to keep dropping. We don't think it's going to drop 7.4% again year over year. However, it has shifted to a bit more of a buyer's market, but don't expect the same decline that happened in the last 12 months in Palm Beach County in 33449 to happen again. All right, everyone, let's get these requests rolling for different areas. St. Johns County, Florida. Let's get into it. Let's get the requests hot and heavy. We got a couple Florida requests here off the bat. St. Johns County. This, folks, is in northeast Florida, right below Jacksonville. St. Johns County is down 3.9% year over year as we look at County View on Reventure app. Minus 3.9% year over year in St. Johns County. You could see that's the biggest one-year decline since 2011. Values in St. Johns County have dropped 3 years in a row. We think they're going to drop again in the next 12 months on Reventure app. We have a minus 4.6% 12-month forecast in St. Johns County. It's the St. Augustine, Florida, to the south of Jacksonville. Good to be a buyer in St. Johns County right now. It's getting more on your side. What about San Antonio, Texas? 78261. 78261. And if you gave a super chat, everyone, and I missed it, I apologize. I'm trying to keep track of this as fast as I can. 78261. This is on the northern side of San Antonio. Minus 1.5% already in the last 12 months. We suspect minus 1.9% the next 12 months here north of San Antonio. This would be 4 years in a row of value contraction. You could see that San Antonio generally is a market that doesn't crash. However, it's really starting to correct in some of these pockets here. So this, if we see minus 1.9% in the next 12 months, that would add up to about a 6 or 7% correction in the last 4 years, becoming more buyer friendly in San Antonio. San Diego, 92122. So I think a common refrain I hear from people in the chat, everyone, is if you're from California and you're from Southern California especially, you say, okay, Nick, I see what you're saying about Nashville. I see what you're saying about Phoenix. I see what you're saying about Tampa and Austin, but that's not happening in San Diego. That's what a lot of people say. That's not happening in California. But I got good news for you folks. Home values are now dropping in most zip codes in San Diego. This is great news. Values in San Diego are finally starting to drop. And in this zip code 92122, they are down 4%. This is near La Jolla, everyone. This is to the east of La Jolla Shores, 92037. This is where they got the barking seals here, as well as a nice little downtown area to walk through. Just to the east, values are down 4% in the last year. We think they're going to drop 7.8% the next 12 months, folks. Oof. Things are getting real in Southern California. Why do we think that? Well, inventory's up, days on market's up. It's a good time to be a buyer in 92122 in San Diego County near La Jolla. Still, it's going to feel expensive. I'm not saying it's going to feel cheap, but it's shifted into your favor as a buyer. We think prices are going to drop 8% at Reventure app in the next year. Someone is saying, I offered $415,000 on this home in Tampa. They have it listed for $449,000. They didn't take it, but the home is definitely overpriced. Should we do a live analysis here of different listings, everyone? How about we look at Cheshire County, New Hampshire? Let's go up to the Northeast. So, we're talking about how prices are starting to drop in San Diego. They're starting to drop in Texas and Florida, and they've been dropping in Florida and Texas for a while. But what about in New Hampshire, everyone? Now New Hampshire is an interesting place. No income tax, no sales tax. I believe it's the only state like it with no income, no sales tax. Values, though, are still going up in most counties in New Hampshire. Cheshire was the request here. Cheshire, New Hampshire is where Keene, New Hampshire is. Values are up 4.4% in the last year in Cheshire, New Hampshire. There's still an inventory shortage here in Cheshire, New Hampshire. We think values are going to go up still another 5.3% the next 12 months. There's still demand to buy in New Hampshire. I think a lot of people like the fact that there's no income tax and no sales tax. They're still moving in. Watch those property taxes, though, in New Hampshire. They will get you. They will definitely get you. 34747. 34747. Let's see. 34747. What state is that? Oh, we're back down to Florida. Celebration, Florida. Oh my goodness. Now, tell me, is this an investment property you're looking at buying here? Because this is Celebration. This is to the southwest of Orlando, and you can see it's a sea of blue, everyone. Values are going down all across Orlando, but they're also going down next to Disney. So Celebration is basically where Disney is, right on the border here. You can see Walt Disney World, Animal Kingdom, Epcot, in Buena Vista, Florida. Well, Celebration is just to the south of it. Values are dropping 8.1% already in the last 12 months. They've dropped 3 years in a row. So values went down 1.8%, 4.5%, minus 8%. So values here have already dropped 15%. We think they're going to drop another 7.9% the next 12 months due to all the inventory, all the Airbnb owners selling. I would be still very careful buying an investment property here if you are buying an investment property. The Airbnb market here, I think, is tanking a little bit. And, I would just make sure you get a good deal. Make sure you get a good deal. Buy anticipating the declines if you buy in a market like this in Celebration, Florida. 77449, Katy, Texas. 77449, Katy, Texas. Folks, Katy, Texas. Back in the day, I went there about 10 years ago for the first time. It's to the west of Houston. And it's on I-10 in Houston, and there is some bad traffic if you go west in Houston. It might be the worst traffic I think I've ever experienced. It's almost on par with what you would experience in New York. Katy here, this is actually a nicer suburb to the west. Median incomes of $90,000 to $150,000 depending where you look. Good schools, decent schools. However, values are down 3.3% in the last 12 months here in Katy. And we think they're going to go down another 5.3% the next 12 months based on our Reventure app price forecast. Now, for those of you that don't know, we have a forecast for almost every zip code in America that's forecasting where values are going to head over the next 12 months. We calculate that forecast based on 5 data points: the inventory, the days on market, the price cuts, the mortgage rate trend, and the recent appreciation. So for those of you who might be asking about, well, what about the Fed cutting rates on Wednesday? The Fed's going to cut rates on Wednesday. Do you track that? We do track that. That's in the mortgage rate component of our home price forecast score, and this score has performed very well in the last 12 months in predicting prices. We think it's going to perform well into 2026 as well. If you're a home buyer and investor, you should access that score. At the end of this video, I'm going to tell you how you can do it for your zip code. But let's get into more requests. 94579, California. Have a property for sale and want more info on if investment properties make sense. Does that mean for a 1031 exchange, Jesus, or do you just mean for this property? 94579, San Leandro, California. 94579. Where are we here? Okay, so this is East Bay. This is Alameda County to the south of Oakland. Now, Oakland, folks, my gosh. Oakland is down for the count. Values in Oakland are down 25 to 27% already the last 3 years. Full-scale crash playing out in Oakland. There's also been a full-scale crash in downtown San Francisco. San Leandro is only down 13%. However, in the last year, it's down 5.5. Do we think values are going to keep dropping here? Yes, we do. We think values are going to drop another 4.9% over the next 12 months. So if you're trying to sell a property here, understand that it's still a declining market. We got lots of inventory here in San Leandro, highest inventory we've seen in over a decade. You got lots of competition if you're a seller, right? So if you're a seller and you see the inventory high and you see that negative price forecast for reventure, that's saying if you price your house, price ahead of the market. If you want to sell your house, don't be greedy. Don't look at what your neighbor sold for 3 years ago and think you can get it. Be realistic. Price your house more reasonably. We're actually having more sellers now using Reventure app as well to help sellers price houses more reasonably. We have realtors also using it to help them price houses more reasonably to effectuate the sale, because that's what we want to do, everyone. We want to effectuate the sale, right? We want houses to sell. What about 27613 Raleigh, North Carolina, home of the Carolina Hurricanes? My arch nemesis. I'm a New Jersey Devils fan, and the Carolina Hurricanes always beat the New Jersey Devils in the playoffs. They do it. They've done it 2 out of the last 3 years. Values here in Raleigh, and this is northern Raleigh. This is almost bordering on Durham. This is actually a good location. You're near Raleigh Airport. You're also near the Research Triangle. Values are basically flat the last year. We think in the next year, they're going to be flat again. So this is a stable zip code here in Wake County, 27613, north side of Raleigh. And we basically just have stable metrics in all our categories here for the most part. So we don't think a crash is coming. If you're a buyer, you might be able to negotiate a bit, but you're not going to get a huge discount, we don't think, in 27613. What about Windsor, Vermont, Orange, Vermont? VA buyer, first-time buyer, not sure what to do, buyer rent in Vermont. Windsor, Vermont. Now, folks, I don't know if you guys have ever been to Vermont. It's a very beautiful place, and actually, it's only a couple hours from where I am right now in Albany, New York. I'm currently coming to you from my New York office. If we look here in Vermont, we can actually see values have started to drop. In Windsor, they're down 0.5% year over year. In Bennington, they're down 3.8%. In Burlington, they're flat. Where do we think they're going to go in the next 12 months? We actually think values are going to go up. So Vermont is starting to experience a little correction. Reventure's data is bullish on this market, though, in the long term. So maybe you would want to maybe get in here and buy in Vermont now. Take advantage of maybe some of the price drops that are happening in the current market, because we think in the next year, values here are going to go up. One thing to note about Vermont, everyone, under investor metrics, we have shadow inventory. A huge amount of the supply here is shadow inventory, meaning seasonal vacant homes. 29% of the houses in Windsor County, Vermont are seasonally vacant. That makes this market a bit different than your average market. All right, what about, I mean, folks, the requests are coming in hot and heavy. Mountain View, California, 94040. 94040, Mountain View, California. What is going on in Mountain View? Now, folks, this is where the tech epicenter of America is. This is Silicon Valley, Mountain View, California, basically square in between San Jose and San Francisco. The typical value of a house here in Mountain View, everyone, it's absurd. $2.7 million. My gosh, $2.7 million. Values here are basically down a little bit, minus 1.3% in the last 12 months. You can see it's kind of like a volatile market. We think they're going to be roughly flat in the next year, down a little bit. There's still basically not a ton of inventory here in Silicon Valley in this specific zip code. Inventory is down year over year. So we think there's going to be kind of a stable market here in Silicon Valley. I wouldn't be surprised if the Bay Area eventually rebounds going forward, because it's an area that I think has already gone down a lot in a lot of areas. 92646 Huntington Beach. We got the California request coming in hot and heavy. Hot and heavy California request. Huntington Beach. This is in Orange County, I believe. Yeah, Huntington Beach is in Orange County. Values are down, or I should say up, excuse me. Values in Huntington Beach are up anywhere from 2% to 3.3% in the last 12 months. Orange County, California, probably the strongest part of California's housing market right now, the most resilient. You can see up in LA, Long Beach values are dropping. They are still going up in quite a bit of Orange County year over year. The question is, do we think Huntington Beach is going to go up or down the next 12 months? We think it's basically going to be flat. Minus 0.3%, plus 0.3%. This is still a resilient market, Huntington Beach. Not a ton of inventory, not a ton of price cuts. A lot of demand still to be near the beach, especially in Orange County. So we think it's going to be a stable market. Northern Idaho, Kootenai County, 83858. 83858. This is near Coeur d'Alene, I believe. Values here, north of Coeur d'Alene, and I again apologize. If I mispronounce some of these towns, especially up here in Idaho, I apologize, but they are difficult. Values are up 1.2% year over year in Rathdrum, up 1.2% year over year. Do we think they're going to go up or down the next 12 months? We think they're going to drop 2.1%. This is a market that's shifting to a buyer's market here in northern Idaho. It's actually was basically last year it kind of became almost more of a seller's market. Now it's back to a buyer's market again. So we think prices are going to drop 2.1%. Idaho is kind of volatile the last 3 years. How about it's Kootenai? Okay, good to know. It's Kootenai. Homestead, Miami-Dade. And before I actually get into more requests, everyone, I just want to talk about how valuable this information is as a buyer. And I actually continue having real life conversations with people about buying and selling houses. It's amazing, I'll just go out and talk to people just at restaurants. And the amount of people who actually tell me stories about that they were thinking of buying a house or thinking of selling their house. And they often have no clue what they should do because it's such a confusing market. I showed you all the news stories in the beginning, right? About rents dropping, home prices dropping, but not in all areas, right? And the national housing market, home prices are still near all-time highs. So people don't know what to do. And the worst situation is if you're a buyer and you're just confused, right? And you're just like, should I buy? Should I wait? I mean, can I afford to buy right now? Is it going to drop right after I buy it? Would it be better to buy a year from now? Would it be better to buy in the spring? This is the beauty of looking at data. Looking at the data for your market can help you answer those questions so you can make decisions with more confidence. Same goes if you're selling a house. Should you sell now? If you do, what should you price it for? Look at the data, take the guesswork out of it, and let's look at more requests. Let's look at more requests, everyone. What do we got? Encinitas, Michael, thank you for the super chat. Encinitas, California. Encinitas, California. All right. We are here, Encinitas, California, basically between, I guess it's San Diego. It's still San Diego County. We're here south of Carlsbad. Values are projected to go down 2.2% the next 12 months. Now, what did they do the last 12 months? They were down 0.3% the last 12 months. You can see we have some different pockets, folks. When you see the red on the graph is saying values are going up. Red on the graph is saying values are going up. Blue means values are going down. And if you change to the home price forecast and you sign up for the premium plan on Reventure app to access the 12-month forecast, it's the same logic. So you see blue, that means declining values into the future. You see red, that means increasing values. In 92008 in Carlsbad, we're showing 29% increase in prices year over year. That looks like a mistake. We are going to have to check that one out and see if that is correct. That does not look correct. We might have to fix that one. But in general, folks, the blue on the map is values going down year over year. The red on the map is values going up year over year. What other requests do we have? I mean, they're coming in hot and heavy. Fresno, California. We got California up and down this request list. 92376. 92376. You guys can let me know. Are you looking at buying? Are you looking at buying a house now? Are you looking at buying in the next year? Let me know what you guys are doing. Would you buy in this market? Is your landlord giving you a discount on rent? Are you going to ask your landlord for a discount on rent? I'd be curious to hear what you guys are experiencing. Let me know in the chat in the comment section. But here in Rialto, which is to the west of San Bernardino, you could see values are down 1.5% the last 12 months. Values down 1.5% the last 12 months in Rialto. And we think they're going to drop another 0.7% the next 12 months. So we're not seeing a crash play out here by any means to the west of San Bernardino. However, we are seeing a softening in the market. We have our best home buyer market score that we've seen since 2018, which is good news for you, but you might need to wait a little longer before the real declines start to come in. Oh boy, Sheboygan, Wisconsin, waiting for the crash in Sheboygan, Wisconsin, 53081. Now, why does like Sheboygan sound familiar? Was there a movie that talked about Sheboygan? I feel like, I don't know, is it Fargo or something like that? I feel like Sheboygan just rings a bell here. If we go to Wisconsin, where is Sheboygan, folks? Sheboygan right on the lake here, up 7.3% in the last 12 months. What's going on? This is one of our fastest appreciating housing markets in Sheboygan, waiting for the crash. Is there going to be a crash in Sheboygan? Well, values have basically been on a tear the last 12 years. We think they're going to go up another 4.6% because there's still a shortage of inventory. DOM is still low. So we're not seeing that crash in Sheboygan. This is actually a really interesting chart on home value growth. Doesn't really boom that much, but doesn't seem to crash that much either. Was a little bit of a dip, though, in 2019 in Sheboygan. Do you think a single wage earner making $50,000 to $60K will ever get a chance to enter the market, or are those days gone by? Great question. I would say it depends on the city. Single wage earner making 50 to 60K. I mean, that totally depends on the city. So we have a metric here on Reventure app that can help you answer this question. It's called salary to afford a house. Salary to afford a house. So what we did is we calculated in each state how much money you needed to make at current prices, mortgage rates, property taxes to be able to buy a house in today's market. If you're in Montana, you need to make $113,000. If you're in Utah, you need to make $127,000. So, if you're a single wage earner, $50,000, $60,000 in these states on the West Coast, I don't know. I don't think so. Not in the short term. However, if you're in Iowa, you could buy a house on $61,000 right now. If you're in Ohio, you could buy a house on $64,000 right now. If you're in Kentucky, you can buy a house on $56,000 right now. You can actually afford to, you actually qualify for a mortgage, less than 30% debt to income ratio, and afford to buy in these states in blue. So I think it really depends. Arkansas, still affordable to buy a house. So I would actually encourage you guys, look at this salary to afford a house data point. It's one of the premium data points on Reventure app. You can see kind of in more like the metro areas like Columbus, Ohio, you need to make $85,000, right? But if you're in Dayton, you can make $60,000. If you're in Indianapolis, you can buy a house with $72,000. But if you're in Muncie, you could buy a house with $40,000. So it really depends on your area. In Nashville, you need to make $108,000 to buy a house. Oh my goodness. In Nashville, Tennessee, you need to make $108,000 to buy a house. That's wild, folks. Nashville used to be affordable. You could buy a house in Nashville making $48,000 prior to the pandemic. Now you need to make $108,000, which is why Nashville's housing market's starting to correct. In Atlanta, you could buy a house on $96,000, but that's totally going to depend on where you're looking to buy in Atlanta. Because if I go and look at the different zip codes in Atlanta, you're going to need to make $200,000 to buy in Buckhead per year. You can't buy in Buckhead. Actually, in some zip codes in Buckhead, you're going to have to make $370,000, but you could buy to the south of Atlanta on $60,000. So I think it's a varied answer to that question, which is a very good question. Can you afford to buy a house, or will you ever be able to afford to buy a house again on $50,000, $60,000? It depends. Thoughts on why Orange, Connecticut, Florida so overpriced, median income low, positive migration, good job market, big pops of low status. Big pops of low status people with ghettos, homes 300,000 overpriced. Orange, is that Orange County, Florida, are you saying? Or is that Orange County, Connecticut? I believe it's referring to Orlando. So Orlando is in Orange County, everyone. And we're looking at county view here on Reventure app. There's all these different ways you can analyze the data. You could look at zip codes, you could look at counties. But in Orange County, Florida, you need to make $100,000 to buy a house. My goodness. The economy here runs off Disney World and chain restaurants. I'm just going to say it, right? I mean, if you guys have been to Orlando, you know what that economy runs off of. It's service jobs, often low to mid-wage service jobs, and you need now to make $100,000 in Orange County to buy a house. Meanwhile, the median income is 83. This is one of the reasons why Orange County is declining. We think values here are going to drop 5.1% the next 12 months. Here in Orlando, they've already dropped 4.2% the last year. So yeah, that salary to afford a house data point is also a big one for you guys to take a look at. New York numbers being lower than New Jersey is because upstate makes the average lower. Long Island houses, no way would income required be less than 180K. Yeah, that's a good point. That's why you got to look at this data county by county, zip code by zip code. McKinney, Texas, 75070. Sell or hold. Love it when the sellers get into the chat. 75070 in McKinney, Texas. 75070. McKinney, Texas. This is to the north of Dallas, everyone. We all know, Dallas is correcting. The question is how much, and how much is McKinney correcting? Well, you can see it's a sea of blue all across Dallas-Fort Worth. It's a sea of blue. McKinney is all the way up here to the northeast. I used to live in Frisco to the west. 75070. Well, values here are already down 5.9%. So if you're a seller, you got to understand that. I don't know when you bought, but values are dropping. We think they're going to drop another 3% the next 12 months. So we actually don't think the correction in McKinney in this zip code is going to be as bad the next 12 months as it was the last 12 months, but we still think it's going to drop. So you'll be selling into a buyer's market. Depends on when you bought. I mean, if you bought two years ago and you're still trying to make money, like on your purchase, that would be difficult. If you bought 10 years ago and you have plenty of room to cut the price and sell your house, it could be a good time to sell. Let's see. Let's see, everyone. What else do we got? This is a very active chat section. I love it. 20190 buyer wait. Let's play this game. Buyer wait. 20190. Are you guys buying or are you waiting? 20190 Reston, Virginia. This is a very nice and wealthy suburb to the west of Washington, D.C. You can see in D.C. the values are plummeting year over year in D.C., but they're still going up slightly in these nicer suburbs to the west. Is it a buy or is it a wait? In Reston, we think values are going to go up 5.4% the next 12 months in Reston. Interestingly, values here have not gone up by more than 5.7% in the last decade. Values here are overvalued or undervalued? Let's see. They're only 1% overvalued. I'm giving Reston a buy signal. Values are only 1% overvalued, and we think they're going to go up 5.4% the next 12 months. That to me suggests you should buy today. Waiting isn't going to do you a whole lot of good in Reston, Virginia. Selling. How about Baltimore? Selling in Baltimore, 21213. Baltimore, love it. Don't really talk about that market a lot, but what's going on? Where are we selling in Baltimore? 21213. All right. So this is near downtown Baltimore to the northeast. Typical home value of 112,000. Let me guess. Is this an investment property? You can let me know. Values are down 0.2% the last 12 months, and our forward 12-month forecast is minus 0.8%. So we, have Baltimore as kind of shifting a bit to a buyer's market, but this is by no means a crash. I think you could probably still sell in this market and do okay, but note that it is shifting to a buyer's market. We just haven't seen the bottom fall out. I would be realistic in your pricing if you sell today. You may be able to get ahead of it if you sell now, everyone. And ultimately, if you're a buyer or seller, it's all about using the data so you can make a more informed decision and ultimately save tens of thousands of dollars on your home purchase or sale. That's what many users on Reventure app are now doing. So head to www.reventure.app and basically access this data for yourself. Let me actually show you a little bit here. Can I show you this little card I put together? Here we go. Reventure Premium, folks. I've been using this data throughout this video. I believe Reventure Premium will be really helpful to a lot of you guys out there who are asking these questions. Should you buy? Should you sell? You're going to want to look at that home price forecast. You're going to want to look at that overvaluation rate by zip code, by county. You can also look at other metrics like the salary to afford a house to understand where your best area to buy based on your affordability is. Reventure Premium. It's $49 a month, which is less than 0.01% of the cost of buying a house. So folks, this is ultimately a very affordable price relative to the decision you're going to be making to buy or sell. And we've had users on Reventure Premium save tens of thousands of dollars. So I encourage you guys to go there now, sign up for a premium plan. And of course, I appreciate all of you guys for participating in these live streams. I hope you